All right, welcome back. Welcome back to the stream. Um, Please let me know if you can hear me on the comment section. In the comment section, you can tell me if you're live. If you can hear me loud and clear, tell me on the comment section. Uh, so this is the last day of the. It's not the last day of the week, but trading. Well, for those of us who trade. So, loud and clear, Steven, welcome. Trading reports, welcome to our stream. So let's you can like our live, you can share on your you can share with your friends, if you're in some communities that people need to learn trading, you can share. Samson Mulo, how are you? Good evening. Say good evening or it's afternoon. Depends with where you're watching us from. So you can tell us you can give us a comment down there before we start. It's going to be a very interesting, some of us I don't know if I should call it morning because I'm using New York local time or afternoon because I'm Kenyan. But whichever way, welcome to our stream. We're happy to have everyone on board. Please say something on the comment section so that I know that you're locked in and you're following. So I'm going to be inviting a guest today if he comes on board. I'm going to be inviting Thanos if he comes on board. So Uh, so tell me what exactly you need to look at this New York if you want me to look at something before I can go to my pairs. Yeah. So welcome back. We are 13 in number. So let us check what's going on. What has been going on? Okay, amazing, amazing. Okay, as I said earlier, this was Bitcoin. There's a friend of mine that does Bitcoin, and I told them about the accumulation manipulation thing. You remember what I told you? Let me just show you briefly before we continue. Okay, I'm going to start with gold, no problem. I'll just check gold, no problem. Make sure that you subscribe to my channel and turn on the notification bell so that you don't miss these streams. And then you can help me push this live by liking, even sharing the link to your platform, to your social media if you're on WhatsApp and you have maybe traders that are there, or there's some people that need to learn how to trade, or they need some signals or something, any insights. Yeah, please like the video. Samson Mulo, thank you. Trading, thank you. Steven L225, thank you. Happy to have everyone on board. So there's something we were checking on Bitcoin earlier today. I was telling you about the price generates equal highs and equal lows on both sides of the price, and then it comes attacks one side and expands. You might think it's selling, but it's buying. But you can see the same thing is happening here. The price did what we call an institutional re-entry on this fair value gap that was here. So it left an unfilled fair value gap over here, which it came to fill. You can see. So the price has come to this fair value gap. So if we are supposed to go bearish today on Bitcoin, we say that when price is in a hurry to deliver liquidity, it leaves behind inefficiencies, which are fair value gaps or internal range liquidity. Once it fills the inefficiencies, price targets the lows now. But I say it again, external range liquidity. So this is it. So let's see if you're going to have a very nice reaction from this level to the external range. Okay, now. So what do we have? Let us check. Okay. Please, we have 21 in number. If guys can just say something on the comment section so that we know that you're all attentive. I'd like you to say something on the comment section so that we know that you're live. Everyone is on board. Yeah. You can share the live, you can share the link with your friends, and then tell me what exactly you want us to check today before the market closes. So I'm going to start with there are some people that were doing GBP USD before I go to my normal pair, which is US30. So I said something about this pair, and you can see it's happening. Earlier on London, we had said there's several things that we said. Just a recap of the same. Just explain. Now you see the price is almost eating the sell side liquidity. These are very nice moves to the downside. So I explained that when price takes out some major side liquidity, it comes to fill the imbalances. As you can see, the reason why the price is reacting from the yellow region is because this was the previous area of support, which was a fair value gap. So the fair value gap was supposed to push us up, which did not happen, and instead the price closed below with a body. That means that we shifted bearish, but not officially, because it hasn't happened yet, because the price has to close below this swing low with a body. So this inverse fair value gap, IFVG, as you can see, price came inside the inverse fair value gap around the 0.5 of the 4 hours key level. Then price has been, I mean on daily, sorry, on daily. And then what happened yesterday is price took out the high and closed inside with a body. That's why we are having a very strong reaction on the sell side. That is why we are targeting these lows down here. This is not yet an order block because there is no major side liquidity that has been taken out. But price can still react. But right now, I'm expecting to see if price will take out this low so that we see if it happens. So, okay. Touch on Euro USD. I'm going to touch it. Welcome, Kevin Moore, to one term. Oh my God. Siku zote one term. Okay. Maden. I thought you. No, come on. I'm not a lady. I understand my profile. My profile might have. Don't mind. I'm not a baddie, man. How nice it would have been. It's still nice if you are not interested in women, but interested in learning whatever we are here to do. But no problem, madam. Ndo kuingia Arusha. Okay, guys, let's continue. So I just said that we are targeting this sell side liquidity over here. So let me check Euro USD, see if the same thing is happening, because I left Euro was selling from my fair value gap as well. Okay, let us see what's happening. Yeah, on daily time frame. Daily. What's gonna happen here? Daily or is it 4 seconds? Let me see. Euro dollar, Euro USD. What's happening here? On 4 hours, price has taken out the low. Can you see this low? Oh, okay, understand. Price has taken out this low. I have understood. Price has taken out sell side liquidity inside an order block. Can you see this order block over here? So we are expecting bullish price action going forward, so that if we price has swept some major side of liquidity. These are 4 hours low liquidity, which is inside a fair value gap and also around an order block. So that's why we are seeing a buy momentum coming up. So if we check on 1 minute time frame, how would you have gotten that buy? It's actually in play, but there is an inverse fair value gap over here. I don't trade Euro USD, but I can just help you understand it. So the price has not shifted yet bullish, but this is what we call advanced market structure shift. I look for entries on 1 minute whenever I was trading Euro USD. So price is crashing up. Let's see. I'll come back later and check what happens to Euro USD. So if I was to buy, I'd buy from the 0.5 of my stop loss down here, and then I can target the highs probably. So I'll just wait and see what happens thereafter. That is Euro USD. If there's something to go by, but let me check what was happening on daily time frame. On daily time frame, yeah. I think we're still bullish because we have something. Yeah, We can just wait first of all and confirm, but checking on 4 hours time frame, we've even taken out this major side of liquidity over here. So this is why I'm advocating for bulls right now, because you can see price has been buying ever since. And then on 1 hour it had shifted bearish. I think there was an inverse thing over here. There was an inversion fair value gap here. You see price played out when we were here on London. The price was here. The price had broken below here. You see, so this was an area of resistance. Price came, generated at a high, and then swept it, went bearish. So it has taken some major side 4 hours lows. So we are just waiting to see what happens. So I'll come back there. Okay, Grace, welcome. One term. Why did price not react from that higher 4 hours fair value gap? On which pair? One term? On which pair did price not do that? Please, if you could tell me. Which pair precisely are you asking about? Okay, Euro USD. Which time frame? Which for? So these which okay. Are you talking about this fair value gap? The price is reacting from there. Why did price not react from that H4 higher? That higher fair value gap. Okay. So you're talking about this one. This higher. You see, there's something we say that you always buy in discount, and the price will always, the price will want to cheat you that it is bearish and it's not. But why? Let me try to see why what's really happening. Why it did not react from here. Let me show you something. This is very interesting. On 4 hours time frame, there's something in. No, it did not happen. This major side liquidity was not taken out, but at least we had this start of this. Can you see this high that was here? So what happens if price takes out some major side of liquidity? This is buy side liquidity like this. Can you see this high that is inside this order block that is over here? So what happens if the price takes out buy side liquidity like it did here? It is supposed to fill imbalances on the lower side. So that's why we are experiencing bearish price action. So it means in the last like 2 days or 1 day and a half, price has been bearish. But now there is an interesting thing that is here. If I want to catch a sell, a buyer would catch it from here. But also, the sell is also valid because there is this fair value gap that is here. Because price, this is a bearish fair value gap. Price closed inside the fair value gap. That means it is supposed to continue bearish. That is why it disrespected this fair value gap that is here. And there are ways to know that if a fair value gap will be disrespected. If you see candle closures, maybe at the 50% level or below, this is an inverse already. But you see the next candle. Okay, let me show you. Let me explain to you this way, not just fair value gaps. What you see here is an order block. Let me get this fair value gap. Let me unmark this one. Please continue liking our live, okay? Okay, when I look at gold, no problem. So if I'm to explain this, there's these last down close candles over here. The last sell candles before an aggressive buy that took out this buy side liquidity over here. This is on 4 hours time frame. This order block is supposed to offer us with support. That is why price did not might have disrespected this fair value gap, but instead reacted from the order block. And you can see after reaction from the order block, it took out these highs that are still here. So after price takes out external range liquidity, the highs, we are supposed to stick in balances to fill. This is external range liquidity over here. Price has taken out the high, so that is why we are coming to take out the next target of liquidity, which is down here. And price has already delivered liquidity that was inside this key level. So if anything, maybe I should just, and you can see the candles have not closed below here aggressively with a body. It means we are still bullish a bit, but also if you'd be careful to check, there is this candle over here, the last sell candle before an aggressive buy that took out these highs. This was also an order block. You see, this is the last sell before price took out these highs. So this makes it an order block, a bearish order block. That is why you see price after it swept here, the next candle came and reacted from there. So let us just wait and see what's going to happen. I'm going to check gold next. Okay. So what time is it? It's 9:27. I'm going to be checking US30 in a few as well. So see USD. So gold, just like we said, price was bearish. Why are you looking for buys? Because of this order block. Maybe short-term buys. Maybe it's because of these order blocks that you are having here from the main threshold of the order blocks. But I want you to be very careful because price has been disrespecting bullish key levels. Like this order block, was this price closed below, it means that the price is disrespecting these levels. And then you can see this candle was so bearish and it closed below the previous candle with some displacement. That is why you see the next candle has been bearish. But maybe the buys are ripe and you can have them. I don't trade gold, but that was my experience. Again, I said the price had had the price had invalidated this fair value gap, turning it into an inversion IFVG when we were here in London. So the price had taken out these close below this low, now experiencing resistance from here, and we were targeting these lows when we were here in London, and you can see price has been going bearish. So in your buys, just be careful because price, when you look at history, price has been disrespecting these key levels. So you be you. I'm now going to ndio natokea. I hope amjagusa US30 pili kwanza. Ndio natokea. I hope hamjagusa US30, ndio I'm starting out. My friend, I thought you were trading GBP USD. So let's check US30. This is my pair. So today we have some news. We don't have news. Is this brown folder? Called brown folder. Called durable. So whenever we don't have a red folder news, we normally have low probability conditions. So if you check your Forex Factory and see the dollar news, you see that there is no red folder. So it means it's going to be a low probability day. So what's the first thing that we did? We said that we are going to wait for price to break out below the previous day high and previous day low. So as you can see, price is still there. There's nothing that has happened. So I'm just going to wait for, it's 9:30, so there's supposed to be a reaction right now, but it has not yet happened. By the way, Juu ya London is almost playing out. Nishatoa dinner. Ndio hiyo sasa mzee. So on US30, if you start from the weekly time frame, and then I'm going to be checking Nasdaq as well. So we said that once price takes out some major side of liquidity, as we explained, from internal, if the price balances and in a fair value gap, it's supposed to target the highs. So you see these ones, price failed. These did the wicks do the damage, the body tells the story. So we say that the wicks do the damage, the body tells the story. All right, as you can see here, let me show you how this one works. You can see we had a fair value gap here. Sometimes, you might see a fair value gap and price is not reacting from there so fast. You see that the wicks do the damage while the body tells the story. So we had a fair value gap here. We had highs over here on weekly time frame. As you can see, the price went below this fair value gap, and someone would think that we are going to close below. But see what happened. The candle came and closed inside. In fact, it just did the damage. It lied to people that it's going to sell, but it got into this fair value gap. And then, as if it's not enough, it did something you call an institutional re-entry. It touched this fair value gap that is here also. If you can see, it's not even at the 0.25 level. If I'm using my gun box over here, it did not even get to the 0.25 level. You see, so this is my gun box. You see, price did not react from the 0.25 of the up. This is just the upper quadrant. So this is the sell side liquidity. This is the sell side liquidity that I expect price to come and hunt later. So you see, this is an institutional re-entry. It means price will still come back here and take out there. So the damage is very simple. It lied to people that it's selling, trapped the sellers, and then got into the buy. But if you knew about the internal range liquidity to external range liquidity, we didn't have problems. I'm going to take a screenshot of this and I'm going to share on my X platform. So we said, guys, you can like my live, you can share. It's the much you can do for me right now. But I hope you can hear me. Can you hear me? I hope you're not going to have problems with. Please tell me on the comment section if you can hear me. Tell me on the comment section if you can hear me, please. I can hear. Okay. Can the rest hear? Let's hear from the rest also, see if they can hear anything. So the wicks do the damage. So as you can see here, the price has delivered on the external range liquidity. There. So now, if the price has done that, what do you expect next? Let us drop down to the lower time frame, see what has been happening on US30. So if I go to daily time frame, here's what is happening. If I check the current price action over here, so what do we see? We see a fair value gap that is here on daily. So this fair value gap is something you need to know. If you're supposed to go higher, you're supposed to come fill these imbalances over here. This fair value gap on daily fair value gap. So, but now the problem is the price has not taken out previous day low. You see, previous day low and previous day high. So I don't have a very clear bias. So whenever I don't have a very clear bias, I come on 4 hours time frame. Let me show you previous day high, like that. Okay. So what happens now? This is an inside bar. This is some low probability conditions because number one, we don't have no red folder. No red folder. That means we're not going to have a very good price action. So I hope you realize that. Here usimguzie on H4 only kindly. Euro USD tulikuwa we had said that. Okay. Yes. Thank you. Thank you, Thanos. Thank you. Henry. Thank you. You can hear me. Logan Kim. Unasema hii institution what? Institutional re-entry. So okay. So we are here. We're saying that this is an inside bar. So we are not very clear on bias because you can see yesterday's candle did not take out either the previous day high or the previous day low. But now you can see also today the price has not taken out these major sites of liquidity. So if I want to see a bearish price action from Monday, I should see the price take out this previous day low and close below with a body, so that I can be sure on that. The same thing that is happening. Let me show you what I exactly mean. Let me show you what I exactly mean on gold. Let me explain to you. When you go to 4 hours time frame, how to identify this bias? You see this candle. You see this candle. Can you see maybe this one? Let's have a look at this one, for example. This is the 4 hours low. What did price do? Price came, swept the low, closed below with a body. That is why the next candle got bearish. You see? That is it. That is just what I want to see. Like here now, it's not a very perfect model, but it helps you understand bias easily. You see this low, price took out the low and the next and closed below with the body. So it tells a very serious story that the next candle is going to be bearish. You see? Okay. So let's go back to US30 and then we check on Nasdaq as well. So this is if we don't get any buyers on daily, I can come to 4 hours, and then on 4 hours the best I can do is just react from the key levels. Okay. So so what we have here, we have this order. Let me remove these drawings so that we don't have confusion. So what do we have here? Yesterday price was reacting from this bullish order block, the last down close candle before an aggressive momentum on the buy side that took out buy side liquidity. So this means that this order block was a high probability yesterday as it was not mitigated. But once this sell candle came and closed and touched the order block, we experienced a very serious upward momentum. You see, so we mitigated this order block. That means that this order block now automatically becomes low probability because it has been mitigated. You see, so this order block has been mitigated not once but twice but several times. So what happens now? If you check above it, what do you see? The price is stuck between two key levels or stuck between two PDRAs. You see this fair value gap. So the price wanted to respect this fair value gap. That's why there was speed in price, but it still closed below. So this order block pushed prices above here, but now the next time price came, it closed below with a body. That means this is some displacement. Once this 4 hours candle close below with a body, it means that the next candle should be bearish. You understand? So this is an inversion fair value gap. That's what I'm telling you. Right now we are stuck between two key levels. So the best thing you can do is react from one key level, or when the price comes to the other one, or when you have a more clear bias like on Monday. So as you can see here, when this candle closed below and this one became an inverse fair value gap, it came and generated a high. So the price comes, generates a high inside this 4 hours key level, comes, takes out the high, and then you see the next two candles were bearish. So right now I don't have a bias on US30. The best thing I can just do is wait, because number one, no red folder. So we don't have a very clear bias. I can only react from the inverse fair value gap or react from the order block, or wait for it to come to the fair value gap. So guys, you can support my live by just liking. You can share among your friends, and then it's going to be awesome. So let's continue. Let's check Nasdaq, and then we can check other pairs also. So we have NAS 100. Some few friends of mine that trade and queue on Nasdaq. So the same thing is happening actually. There's someone that asked me about Nasdaq early in the morning, and this is what I had to say. And the same thing is happening right now. So yesterday we were discussing with a friend of mine, Thanos, and we are saying that people always just see the fair value gap. You see, the fair value gaps are easy to identify, but now using them sometimes can be something else. So let me tell you, you'll not hear this somewhere else. People will not want to tell you this, but the high probability fair value gap is the one that has got liquidity inside it. You see, so liquidity is divided in two areas: external range and external range. You see that? So internal range, external range is mostly the highs and the lows. The highs stroke lows. So external range is the highs stroke the lows, and then internal range is the fair value gap. So these inefficiencies. So the price, we said that mostly the fair value gaps. So what I tell, what I with my years of experiences, I've learned that if the price is not sweeping external range liquidity or the highs and the lows, it is simply filling the fair value gaps. So in this case, you'll just identify a fair value gap, and then you see, if you, let me remove these diagrams here. I hope you can see correctly. Gold post, karibu sana, welcome to our live. No, I'm going to check your USD. Don't worry. So we said that don't just look at a fair value gap. Wait for price to generate liquidity inside it, and then take out that liquidity. You know, everyone knows that the retails know that the price will react from the 0.5 of the fair value gap. So we have this fair value gap over here. See what's happening. The price came the first time, it reacted actually and went bullish. You see, can you see this on the first quadrant? This candle of two, that was yesterday. Two, price actually went bullish, and then that's a trap to show that it's buying. But now the thing is, the best reaction comes from the 0.5. You can see also, this was at 8:30 yesterday. Price came and went bullish. You see, it even does a setup for you. It will generate a setup for you. That's why you're seeing this week. These weeks on high time frame, on lower time frame, these are candles. Okay, so these weeks sometimes you'll find a setup and it even play out like 60 pips. But now the smart money understand that the price will have to close this candle and leave liquidity inside the fair value gap, and then wait for price, be patient, wait for price to come and take out that liquidity. We've said the price reacts from the 0.5 mostly of the key level. This is the key level, the fair value gap, like that. You can see the price comes to the 0.5, generates a low, and then comes and takes out the low. This is a stop hand. You see? So that's why we say that time and price. You cannot have a drawing in mathematics without x and y axis. So in trading, you need time and price. So what does this mean? So in simple terms, this what means is the time is you will wait for price to generate these time-based liquidities. Maybe a 4 hours low or a 4 hours high or a daily, whichever, or a London high, Asian lows, those types of liquidity that are time-based. So the price now is the pattern, the fair value gap. So the fair value gap is useless if it is not coupled with time, okay? So you have to wait for price to generate that low, come and take it out, and then that's when, after the stop and you realize, that's when the price aggressively moves. Because you can see before the set, before it did a stop and there was no aggressive move, but after the price took out the low, there was an aggressive move and went bullish. I think ilienda 100 and something pips, 140 something pips. So I don't know if you have problems with entries. If you have problems with entries, you can tell me to drop down on the lower time frame and explain to you. But now what is happening right now, why I don't have a trade right now, but there's something also that I can maybe share. Whenever you see these high time frame weeks are gaps. Okay, so these weeks are gaps. How do you use weeks? Are like fair value gaps. These are rejection. We call them rejection blocks. You can treat them like any other key level. Like this week, you see this week now. See how beautiful this is. This H4 week that bought yesterday, you see, the price is actually reacting from the 0.5 level of this. And you see on my rectangle, this, I don't know if I should call it the consequent encroachment or the mean threshold, but it's reacting from the equilibrium level. So if I drop down to the 1 minute time frame, I'm going to find a setup that is already in play. You see? See the thing, it's even buying actually, but in this case, I don't have a very clear bias because it has not taken out the previous day's highs and lows. So, but that's just what I would see. Let's just wait and see if it's going to react from this 0.5 and do something. So this is the inversion fair value gap on the entries IFVG. So I'm going to see if price has just violated the inversion, it has come inside and it is maybe cruising up. So if there is something to go by, I'm just going to look at that 0.5 of the week. If it's not going to happen, then I'm just going to wait for it to close below. But then the reason I'm stuck on bias when it comes to Nasdaq is because price just took out the highs, so it's supposed to 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 to, to be rebalancing the inefficiencies. So I thought maybe price will just come to this low. If not react from the 0.5, it might just come and take out this low first, which is I think yesterday's low, the previous day low. And then we can have a trade. Yeah. Hello. So guys, you can tell me if you have problems on entries, and then I can tell you. I'm going to check Euro USD right now as we wait for trades to play out. So I'm currently I've said that I'm looking at 0.5 of the week. See if price is going to react in anything anything that is serious. So if I would take my buy, it would have been on from the inversion. So if I was to, you see, this is at a trading session. So maybe I'll take my buy from that, and then I'd target these highs. Actually, it's in play. So this level is the 0.5. This is where the entry has come. So let's just wait and see if it goes higher and higher, and then I'll post maybe later. So let's check on Euro USD. There's a friend of mine that. Okay. So guys, are you loving this session? You can tell me on the comment section. You can tell me on the comment section if you like this, if you're following, if you're there, you can tell me on the comment section. Okay, Logan, thank you. You can tell me on the comment section if this is informative for you. So so if I was to check Euro USD on 4 hours, there's someone that needed to know something. The price is still doing its thing. Yeah, I think the only thing I can see is, I don't know if the buy is, but also there is an unfilled fair value gap down here, so the price might even decide to come down here. Let me measure this swing high and this swing low, see where the equilibrium is. From here to here. The price might decide to come up to this level. Okay, but let me see. Yeah, it's not a very clean price action. But remember, guys, today is on Friday and we don't have a red folder. So that means our conditions are not the best that we would experience. So where Billy, I'm not finding anything that is so good on your pair. I think you just have to wait and see. So back to US30. Let me see what's happening over there, and then I come to Nasdaq. So guys, you can, as we said, you can assist our live by sharing. You can like. We appreciate the comments. We make our live maybe more famous. So currently we are reacting from the inversion fair value gap. And if I check on 15 minutes, what has been happening is what I'd say. On 15 minutes, because we are now from the 4 hours inversion, from the 4 hours inversion fair value gap, we have these order blocks, the last buy candles before price took out these lows on 15 minutes. Let me see if it's making sense. If you don't get a trade today, don't worry. It's a Friday. We don't have to. We've had some very successful trades today, or during the week. We might not want to spoil anything. So if I measure from this swing high to the current swing low here, this swing low, you see price has come around the 0.5 level. What is that? The equilibrium, this order block. You see, and it has done a stop. Is it a stop? And not really. I don't know. Maybe my broker is. Let me check on YM. There's the futures of US 30. I think price has not swept that low, that high. It's DJPY. Okay, I'm going to check it in the next few minutes. So on US 30, the sell is still active because we are having this order block from at the equilibrium level. If you see it, if there's anything to go by, maybe this order block that is here. Price has generated equal highs, some highs, took them out, and then. So if you can have questions, please, you can ask them. As I have said, we do not have a very clean price action today because of the lack of news. Okay, we don't have news. A red folder. Whenever we have red folder, that's when we have the best of the price action. So after the price took out this high, what happened? On 15 minutes, on 50, so there is something here at we said. So after the price takes out the high, so when you drop down to the lower time frame and look for an entry position, maybe it's this fair value gap that got violated. Price closed below, and now it's reacting from that inverse fair value gap. But again, let me remind you very well that we are stuck between two key levels. We need price to break out of the consolidation, because the best thing you can do inside a consolidation is just scalp. Like this scalp, just with the knowledge of 15 minutes key level, you'd get some 50 pips, I guess. Let me see. From this inversion down here, you see it's 67 pips. Just even when you're stuck in a consolidation, the best thing, if you understand liquidity, like now here, we are having this order block. Why is it an order block? It's the last up close candle before an aggressive downside move that took out some lows over here. You see? So this makes it an order block. So just by the knowledge of knowing this is an order block, and there is liquidity that was generated inside the order block, the buy side liquidity that is here. So if you want to do scalps even inside the consolidation that is here, price has taken out one side of the liquidity. So you target the opposing side. So this is a high buy side liquidity taken out. Buy side liquidity taken out. So if you drop down to 1 minute time frame and you want to get something for your Misheveve and whatever thing, you just come on 1 minute time frame. This is the 15 minutes key level. So for confirmations on 1 minute, let me remove the diagrams and show you. So we were bullish whenever we took out the buy side liquidity. So now if you want to look for sales or a sell opportunity, is you look at the previous areas of support that have failed. Which one is it? We have this fair value gap that is in the premium, and then wait for price to come and look at this fair value gap. Wait for price to come and close below the fair value gap. In that case, now this fair value gap becomes an inversion, like that, and then you can sell from here, put your stop loss above here, and the price has delivered for you some 60 pips. 60 pips, bona. It's not bad money. 65 pips. This didn't even have emotions. This went in like 4 minutes, just using that small information. That is why I actually love trading these pairs compared to some slow currency pairs that generate a lot of emotions and you feel like it's the end of the world. Stewart L225 on that EU yesterday. Can you treat it as an order block? Okay. Okay, when you say the 9 hour candle, are you referring to it as in which time? Is it New York local time or which time? You need to tell me which time is it. US 30 H4, Eric Njeri. US 30 on H4. Could we be reacting from that? H4. Yes, we are reacting from there. We are stuck between two key levels. That's what I'm telling you. We have the bullish order block and then the inversion fair value gap on on the higher side. That is why I'm scalping to the lows. So you can see my, so as I was saying, this is how you do it. So the guy who was asking about Euro USD, please tell me if it's New York local time so that I know which candle exactly you're talking about. But I can show you some order blocks, maybe even in New York local time. Okay, let me check. So, but first of all, let me check Nasdaq, see what's happening over there. Okay. Perfect. Look at this thing, man. Where Thanos? I'm telling these people. This is so beautiful. Look at this delivery. You're tape reading this, buying from the week. Price did not even have drawdown, to be honest, because price generated. Can you, if you trade Nasdaq, please tell me on the comment section first. If there's anyone who is trading Nasdaq or trades Nasdaq, tell me if you saw that buy, and why, if you would have taken that buy because of the week. Does that mean that we have taken out PDL before we buy? Yes, that is no. No, 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 no. I'm not saying we buy. On US 30, we are reacting from the order block yesterday. Let me show you. Look at this. What I'm saying in a nutshell is it even in a nutshell? It's not even in a nutshell. It's outside the shell. This is an order block. This one. This is an order block. So the price mitigated this order block. It left the previous day low here. And then as it was going up, it violated this fair value gap. So price is stuck between these two levels, the order block and the inverse fair value gap. This is an inverse fair value gap that was generated, you see. So the price is stuck in between there. So the best thing you can do, because you can't just trade, you can just scalp in between. That is why I was saying on 50 minutes time frame, identify an order block and a liquidity level like we had here. Let me show you. See, price generates a high inside the order block. Price takes out the high and price goes bearish. It's as simple as that. This is not quantum physics. You need to take it easy. Okay, so let me check the Euro USD candle so if I was to explain to this guy what an order block is, okay, I mean, if we take out the PDL, there's a good fair value gap on daily. Yes, that's what I'm saying, Eric Njeri. If we take out previous day low on US 30, we will get into a fair value gap, which will be very good for us. But right now, we have not gotten into the fair value gap. So we cannot be sure of the buys yet. The best thing we can do is just wait. But what I'm saying is you can scalp in between. That's why I'm telling you, you need to go on 15 minutes, identify a key level that can support your buyers. That's why I was selling and it went like 60 pips. And I'm asking again, who is trading Nasdaq from their side, and then they can tell me. On Euro USD on 4 hours time frame, this guy is saying there is a 9-hour candle. I don't know which is it. 9. Maybe near Jana. This one. Okay, let me remove this one. Please, if I show you the candle, please tell me if it's the one. Five. This one. So this one is an order block, yes. But now there's something you need to know. This is the last buy candle before an aggressive sell that took out liquidity. But then look and see. As the price took out the liquidity, we expect a reversal. That is why we're having this bullish price action on Euro USD. You see, price generates equal lows, takes them out. That's a major side of liquidity. So that's why we are experiencing. We want to balance some inefficiencies on buy side. On 1 minute time frame, how would I have taken the buy? It's quite easy. Just look for a fair value gap that has failed, like this one now here. And then enter the buy from here. Put your stop loss here. I think the price is around, I don't know, maybe 20 pips. I don't know. Honestly, I don't really. Oh my god, this is so heartbreaking. 15 pips in 38 minutes. I think you guys need to come to US30. Sent my chat. Sent you my chat. Was the bite? Yeah, okay. Wilson will ingia your buy. Yeah, I'm actually see. Danos took the buy. This guy's made like 5,000 USD. Wow. My God, he's buying from the inversion as well. It's a very beautiful trade. Thanos was buying. He has sent me the chart. Who else was in that buy? So I think you guys on the Euro USD, you'll have to deal with emotions that come with this pair, because you see this pair goes like all these candles and it's printing like 15 pips only. But no, there's no problem. You're going to improve with time. But I hope I can help you get these pairs that move like it's the end of the world. So let's see if this buy plays out on Euro USD. So on Nasdaq, this is a very perfect setup, man. So just to explain why there was a bullish price action on Nasdaq, just to explain, okay. Local plug one term siku zote. USD US 100, I'm not seeing anything yet. Still waiting. My friend, we've been buying US 100 for some reason. Let me tell you why. The trading report says the XAU, there is a buy that happened at 944. If you were trading gold, would you have taken it? Okay. Let me check. Let me show you first of all where you would have taken a buy on Nasdaq, and then we check on gold. Okay. Okay. So let me show you again. There's something I've said here. Very simple thing to know. I'm saying wicks are gaps. Wicks are gaps. So if wicks are gaps, treat them like fair value gaps. They are areas of inefficiencies. So what do? There's the anatomy of a PDRA. The anatomy of a PDRA. Look at this now. On US start on Nasdaq, the price did not take out the previous day low, and then you're wondering why is it buying right now? Here is the explanation why it's buying. This is the week. You see this week on high time, not just weeks, any other week, high time frame week. You see this week. This is a rejection block. If you take this week and subdivide it, the anatomy of the week. You see, Mr. Westy, why you're not seeing anything on Nasdaq and we are seeing something? Look at this week, quick scalps. So if you take your gun box like this and then measure, you see price is reacting from. We've said the weeks are gaps. And just like fair value gaps, we wait for price to react from the 0.5 level. So once price came at this 0.5 level of the H4 week or high time frame week, we just drop down to the lower time frame and look for a setup. Let me show you the setup. I was actually showing you guys here before we continued. Some of us are still waiting for breakers to form, yet we had something we call advanced market structure shift. So the price is in a hurry to deliver liquidity on the sell side, so it leaves behind gaps. You see? So this is the gap. This is the gap. Okay? So where's the liquidity that was taken out? These lows. Okay? Liquidity. Liquidity is the money, my G. If you don't know what liquidity is, you are the money that is being hunted. So if you want to go bullish because we are reacting from the 0.5 of the week, we wait for price to invalidate or to invalidate the previous areas of resistance, because we want to experience support. How do we do it? Once this candle came and closed above, you see this candle, the 943, price closed above that candle with a body. So that means we've shifted bullish as an advanced market structure shift. So automatically what we have now is an inversion fair value gap. And if you're not fast, you cannot see this because the next candle came at almost to the 0.5 of the area of support, and then you had your buys. These are very, 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 this is a very beautiful buy. You see, this thing has gone like 50 something pips, man. See? So congratulations to people like Thanos and others who took the buy. Okay. So USDT is getting a breakout. Baninko, Mana Bandman, where you stay? Welcome to our live, man. Baninko. Say hi to JJ. So Logan Kim, can you take us through setup Thanos? I've learned a lot from his ex post. I think the setup I'm explaining on NASDAQ, that is what Thanos trades. That is the setup that he took. And I'm going to invite him here and I'm going to give him the microphone and he's going to say hi to you. So, Baninko, welcome. And then Bravin Kipkirui, should I hold to the previous day highs? Which pair are you holding to? Please, if you'd be more precise so that I tell you. PDL on US30 is being taken. Let us see. So I'll just put my long position so that no. My buy went very well, so I'm not going to put anything anymore. So let me check US 100. No. Those are quick scalps because it's not very clear, but that it depends with how, you see, the thing is I cannot tell you to hold to a certain point because I am a scalper. If I make like 50 pips on Nasdaq, that's a very good move for me. You see, so I don't know how much your risk is defined and how is your risk reward ratio. So I think it will be up to you to make a decision on that. So, but the move has happened, okay? Okay, remind me the question on gold. Eric Njeli, yes, Logan. I think we should now look for buys on US30. Let me check on US30, my pair. I have not even taken a trade today. Oh, Jesus Christ. This is beautiful. Yeah, look at this thing, man. I told you guys, we are here to win. This thing has, just to explain once more, I won't get tired of saying this. Let me remove the diagrams and take you back to 4 hours time frame. The first thing the price was taken out, 4 hours, which is the 4 hours low. Sell side liquidity, which is inside an order block. So most probably we are supposed to go up. That is the narrative. So just before we do that, order block price comes, gets mitigated, goes up, but ends up closing below the inversion fair value gap. So that means what? You're bearish. So catching the bearish move, 15 minutes time frame, because that's a trend continuation. If I measure the highest high, the swing high and the swing low over here, this high and this low, the price comes around the 0.5, generates a high and still takes it out. You see the best trades, if you have to take a trade, at least let the trade sweep some liquidity or reach a high time frame key level. So this is the high on 50 minutes. On 1 minute time frame entries, very easy. What do we have? An inverse fair value gap. Price closes below, comes inside the inverse, and we've been cruising down. The last time we checked, it was like 60 pips. Let me see how far it went as we took out the previous. Look at this, 131 pips. Why is that guy who was trading Euro USD? This pair has given you, in 22 minutes, it has given you 124. Something that Euro USD will take 3 days to give you. So there's something good in learning these pairs. So I know guys want to long, people want to long this pair US30, but let me tell you something. It's something I like. After the price takes out a low or a high, I wait for it to do a stop and first. but it's not a must for it to do a stop hunt. But it generates a low because you know that it has taken out the previous day low, so you expect it to go bullish. Yes, that's what everybody expects. But mostly the price will do this and then come take out this low and then generate a new setup. But it doesn't mean that it will not buy. It might come because it has already done a setup to buy like that, and someone might long it. But for me and how I like to do it, I wait for price to do a stop hunt below here, and then I can long it. And we are inside the actually the 950 macro. But 950 macro is 70%, I think 70% trend continuation and 35% reversal. So, how do you get reversals and how do you catch trend continuations? I'll tell you about it. So, there are people who will do the first attempt here to buy from this in past, and there's some people who will wait for it to do a stop and below here. So, let's just wait and see what happens. So, okay. Hey, we Billy, siachana hizi mapea za forex zitakuwa. Okay, let me see the gold question. What if it inverts in the even if it inverts in the 5 minutes, it doesn't mean it's a higher probability. You see, even a setup on 1 minute is also equally as the 1 minute as the 5 minutes. As long as you're in line with the high time frame, you don't have a reason to worry. So XAU, USD. Let me see if this guy, there's a question he asked about gold. And there's a setup that happened. Was so actually it happened, but I told you that it's a low probability for me. Reason why? Because gold has been reacting, has been disrespecting key levels on the bullish, and reacting from the bearish key levels. But again, we have these unfilled fair value gaps here, which can be used as targets. So what is happening right now? We have these two down closed candles down here. Let me remove the top one. Let me explain to you why it is buying, my dear friend. Look at this. These are two order blocks. The last sell candles or a sell candles before an aggressive buy that took out this high over here. So that qualifies these ones to be order blocks. Okay. So the price comes, does a setup and goes up. But again, remember this might be a short-term buy. That's why I told you I might not look for a buy setup for some reason. And then price is very busy generating equal lows as it is going up, which means these are very serious targets. Can you see these ones? Price is going to hunt these things, born, and you're going to see dust. If you see price, your setup has formed, but it is still generating equal lows, just be aware that price will come back there, or price generates trendline liquidity or some things. Okay, hey, bwana, nimesweat. On what time frame do you look for stop hunts? 1 minute time frames. You see, stop hunts can happen even on 4 hours, but for confirmations, I like seeing stop hunts on even 1 minute time frame. So a high probability breaker or a high probability inversion fair value gap presents itself after a serious stop hunt. Okay. Okay. So what time frame do you look? Okay, Billy, man, you know what you're doing, like analysis. You know what you're doing, like analysis the market ni kama is the easiest thing to do daily. I've been doing this for close to 2.5 years, two years. So it's worth the risk. Man, analyzing the markets is this. Anyway, so let's wait. I would not take the buy. I just told you why. I would not take the buy, the guy that asked, because reason number one is price has been busy disrespecting these key levels, as you can see. So why you need respect? But again, I've said there's some unfilled fair value gaps over here. So after this stream, we'll look and see how this thing went. Let's go back to US30, see what is happening. So we are just going to see. We are just going to see if this price reacts from here or does a stop hunt, and then we're going to see who wins. So guys, you can keep liking. You can like my live. You can share it. I'll appreciate very much. Yeah, let's just wait and see. There's some people who say that price will come and do a buy from this level, but I'd like to see price do a stop and fast. But my bias today was bearish, but the price also got into a fair value gap. Longs, maybe longs from here, put a stop loss here. But again, I said I'd like to see price doing a stop and fast. Okay, but let's wait and see. If it comes here and buys, okay. But if it comes, does a stop and goes, that will be better for me. But I was selling. I was just selling US30. So okay, if you have more questions to ask, I'm here to answer them. So let's wait and see. If you have more questions to ask, now would be the time. Okay, so Eric Njeri is asking, so you said for inversion, I should not limit myself to 5 minutes on alone. I always consider the 5 minutes or 15 minutes. That is for lower time frames. My friend, if you take trades on 15 minutes when it comes to yes, that you will be whipped seriously because your risk will be will not be very well defined. That is why I'm asking you to take trades on 1 minute time frame, like we did on Nasdaq. That will be very fine as long as it takes out some serious level of liquidity. I think there's no problem. And then gold ni mashak. Oh my god, gold will humble everyone, bwana. So you don't use intermarket analysis. Intermarket analysis is it okay, okay? What do you mean by I don't know the meaning? What's the meaning of that? Please, if you'd explain to me what intermarket analysis is. Wewe guzia GPA bwana, utaki ile deal yetu kaivana. Wewe mzee. Hata niguze. Wenyewe umesema gold. Naona ni kama hauna au uko sana. I don't know what intermarket. Ama kucheck hizo pairs mingi. I don't know. I'm just focused on one thing. I've not been a trader for a very long time. It's just a short time. Okay, GPY. Oh my god. These pairs will kill me. So as I was saying, JPY. When was this? I don't even remember. Let me check. So on JPY, what do I see? Yeah, VY. I think this is in Friday 1, 5. What do I see here? Price might come into this inverse fair value gap, but it has not taken out this. It has generated some equal highs, so it will come back. will come back and take out these highs. So you have to wait for it. If you have to buy, at least wait for. No, this fair value gap is not the most. It's not in the most discount to buy. Maybe wait for it to come to this inverse fair value gap over here so that you even think of buying. So in the meantime, it can buy from this level, but the best level is here around this place on 4 hours time frame. So as I can see right now, it is selling, but it has also right now. What I'm saying, it can buy, yes, because there's a small fair. There's a daily key level here. Jika unaona mzee, kwanza na kutext DM sahi. So this fair value gap over here on daily might push prices higher automatically. But now it's a very risky buy because yes, it's a high time frame key level, but also it might decide to come down here. But if you're supposed to do the first attempt and the second attempt, then that would be good for you. So let me see if there is a setup. There's no setup still to buy. I don't see anything that is there to buy because there's no hakuna displacement yet. If there's any displacement that should come in Afakua hapa, once this kind of closes above here. So in the meantime, we just hold for sales and see what happens until price shifts. What the hell am I trading? Yeah. Okay. So Thanos GL, I don't know where Thanos went. Night Fox, welcome back. Thanos is here. Steven, SMT, Nasdaq and US 500 works very well. US 13 is on its own sometimes. You see, US 30 sometimes is on steroids and some weird things. That's why I don't check for SMTs. What Thanos is telling me is actually the truth. So you should listen to that. Welcome, Night Fox Banner. My G, my homie. We are the only forex traders from our home. Me and this guy, Night Fox, Eric Njeri. There is a higher, there is a H1 inversion fair value upon USD JPY inside that H4. Unaweza explain concept here. Me, I don't trade TGIF. I don't trade. Thank God it's Friday. There's someone that is making me laugh so much. His name is Billy Shirley. This guy is in Euro USD. This guy is in Euro USD, USD JPI. Yes. You'll die. You'll die a very bad death, my friend. Oh my god, this is so interesting. Tunarudi that mzee. Sawa. Like naweza explain. I've said I don't use TGIF to be fair. Uh, I that was when you were learning and Danos was explaining that concept to me. I think that it's not a concept, it's an ICT strategy. I did not major a lot on it. So I might not be the best person to explain what Thank God Friday is. Maybe Danos can give you some heads up on that. So let's check on US30, USD There's someone that was saying something about H1. There's a H1 inverse fair value gap for that USD inside that H4 one. Me, I'm telling you on this pair, if there is something I just consider buying, honestly. There's nothing to sell here. You see? There's a daily fair value gap there. But then there are two fair value gaps here. So at least you have to wait for price to come to this down one. So that's why I'm telling you, keep considering sales. This DJPY, ikuje huku chini. Unaona these unfilled fair value gaps. These are very nice targets. So that at least price, price just doesn't move the way you see. It has to be. You see what the SDJPY is doing? It has not closed above. That's what I'm telling you. What has this pair done? It has generated some buy side liquidity inside an order block. This is an order block. The last or a series of buy candles before the price went bearish. And then comes, generates a high and does a stop point. And you're thinking that it is selling, it is buying and it's not. So you better focus on that. So let's check our pair US30 and then Nasdaq. US30 has been here. I said that if I'm supposed to take any buy, it is from this inverse area. If not, it's going to do a stop point below here, and then I'm going to think about buying. But my sell, the sell was my bias for targeting the previous day low. Again, on US30, the price, I think the price visited the daily fair value gap, I think. So we are still going to be very bullish. As you can see, yes, it has just done very well. US30 has taken out this low, and it has gotten into a fair value gap on the upper quadrant. So we have a reason to support the buy. The internal range to external range. We are saying now we are targeting maybe these highs. If there is anything to go by. Okay, these are fair value gap. So it's up to you to see how your entries will be. If you have problems with entries, you can as well tell me. Okay, Billy. Yeah. Aries Erastars. TGF is just a retracement of the week's range, around 20 to 30% of the week formed. Orange candle. That is perfect. Actually, that's what I was taught on TGIF. It's only that I don't know how to check it. So yeah, I think Aries has explained it very well. The guy who was having problems with the thing. Thanos Aongebana, he is doing good on X. Let me see if I can send him the link. I don't know if you are going to have problems with the internet, but let me see if I can send him the link. And then he's going to join. Just a minute. Let me try send him the link if he's going to join. I've never invited a guest before, so I hope I'm not going to have problems with connection. Just a minute. I've given Danos the link. I hope we won't have problems joining. Let us see if it's possible for him to join. We can talk to him here even if oh my god, this is so interesting. Thank you, Night Fox. Danos aongee bana, he was doing good on X. I learned something from him. Marvin, we miss you pale. Kabla join Shadi. Unaweza explain difference the advanced market structure shifts na inverse fair value gap. It's actually the same thing. Advanced market structure shift is just a fair value gap that has failed. No. Ni fair value gap too may fail. It's just the same. You just use it before a breaker is formed. That is used to make maybe your nini yani. Ah, nana sana alipatia hiyo folder niuze. Pata pesa. Okay. So US30 we are just waiting. Let's see what happens to Nasdaq. Just a minute. So Nasdaq has been buying just like we said. I think that is it. Okay. So we're just waiting. Let's just wait and see. We'll come back to check the goal to see what happened there. Okay, okay, guys. So keep the questions coming. So when it okay, there's something that Eric Njeri was saying. Actually, very true. I was really looking forward to finishing those 200 setups he wanted to do. Thanos, for the short time I followed him, I learned a lot. This Thanos is more famous than my. Oh my god. If it was someone else, I would have ended the life. But because it's someone who has taught me before, I'm actually inviting him to this life. Honestly, if it was not for him, I would not have understood these concepts. Just to be fair. See? So the setup on Nasdaq has been very successful, as you can see, Fox. And you can continue sharing this live, guys. I appreciate a lot. Yeah, you can share the link on X, on any other place that you'd like someone to see it. Okay. I don't know if Danos is able to oh, I may join watch any micro page. Danos, unaweza ongea?
Can you hear me? Can you hear me?
I don't know. Danos, can you say something?
I don't know if you can hear me. Can you hear me?
Danos, if you could speak. Yeah, I think you're not audible. Check your microphone, but I've moved you to the stage, so should be able to say something.
Oh.
I think Danos is not audible. I don't know.
Can you hear me
Maybe
now?
we'll just get to know how this thing is done, and then we're going to be. Mnasikia Thanos? Sawa.
They can hear me.
Okay, fine, fine. Take the stage, bro.
I'm asking if they can hear me. I don't know if I can present to explain the trade and how I took it. I don't know if I'll be able to present. Can I share my screen? Ooh. So share screen. So I don't know if they can see my screen. Share screen. I don't know if you guys can see my screen.
Check it. There's a place in you have to select, and then it tells you move to stage. Okay, let me see.
There's a place I have to.
Yeah, I've done it.
Oh, it's visible now. Is it visible
Jesus
now?
Christ.
Is it visible? Can you see my charts? If you can see my charts, tell me in the comment section. So this is the trade I took on Nasdaq today. What I marked is the London lows here, because this is 430. So I marked these lows here as London lows. I think I've labeled them here. These were the London lows. I waited for the London lows to be swept into a 15-minute fair value gap here. If you can, let me show you the fair value gap on 15-minute. Let me remove this. So this is the 15-minute fair value gap. There was a 1-hour order block below it, but I did not expect price to drop all the way to there. So when London lows were swept into the 15-minute fair value gap, I waited for this. This was the first presented fair value gap after 9:30, the one ICT talks about. So I waited for the market to close just above the fair value gap, and I used the next candle to take the trade, and then I marked these highs above here that are just above the 30 minutes breaker block. I don't know if I had the charts are here. Let me check. So this is the trade, the way I took it. At 9:30, manipulated taking London sell side. Entry based on first fair value gap as inversion, anticipating sweep of London highs just above the 30 minutes breaker. There's a reason why the London highs are up here. Let me show you. The London highs are actually somewhere up here from midnight, but there's a reason why I took these highs here. And the reason is I am anticipating, if you look at daily time frame, let me show you. Let me hide this. Previous day high was taken. So I was anticipating a previous day low sweep. But then for me to anticipate that, I wanted this market to close, the candles to start closing below this 4-hour fair value gap here. This is the 4-hour fair value gap. This one here. So that is why I targeted the nearest liquidity. I'm not having high expectations of price coming up here. So you also have to know which liquidity you are targeting. In my case, the nearest liquidity was this one here, that is just above the 30 minutes breaker. This is the 30 minutes breaker block. How we quantify a high probability breaker? These are the last two down close candle before price came up and swept all these highs here, all these highs. So these are the last down close. So it's the order block. These are the order block that drove price up to sweep all this liquidity on the left. Now, an order block becomes a breaker when the market sweeps, violates the order block aggressively into the opposite side. Now, these two down close candles, I consider them as breaker. When 9:30 was starting, market was somewhere around here. And I anticipate a retrace into the breaker if I am to sell up to the previous day low. The previous day low is this candle here. This is yesterday's low here. So I anticipated a retracement into the breaker, and so I looked for the liquidity that is within the breaker or just outside the breaker, and I was expecting the candles to come and sweep the liquidity, but then close inside the breaker. So if I'm going to sell this market up to the previous day low, I'll wait for the market to come again below the breaker. And that is when now I'll drop to, I'm looking at this from 30 minutes or 1 hour or 4 hours or whichever time frame on higher time frame. But then for me to frame an entry, I'll have to drop on lower time frame, for example, 1 minute, and then I will look for such a setup, or the setup that I use, the one for breaker, like last up close candle, liquidity sweep of the London, close above here, retracement touching the breaker, because I would have used this candle here as my order block that pushed price to sweep these lows into a 15-minute fair value gap. And then I will wait for price to close above this order block. A failed order block is a breaker. And then this retracement candle here, this is an entry for breaker. So if this market starts closing below this breaker here, the 30 minutes breaker, I will look for such a setup again. I'll wait for a small liquidity sweep inside here. Maybe something like this might happen. The market might consolidate here, then come and sweep those highs. So this will be my breaker here. This candle, the last down close candle here, will be my breaker, the one that I'll be anticipating to frame the shorts from. So when this market does something like this and closes below this, the last order block that will be here. So I will anticipate for a reversal like that, and then selling all the way to previous day low on lower time frame. All my entries are usually based on between 1 to 5 minutes time frame. So it is the same thing I have done here. Even though I did not use the breaker, I made an early entry here using this inversion fair value gap that has there's a small volume imbalance here. This one. If you look at my entry, that is what it is based on. This is my entry in the volume imbalance here, and then taking these highs here. So that is the trade that I took today. So unless you guys have a question. So, Macolin, if these guys don't have a question, I think I'll stop presenting and then you can take over the stream. So, this was today's trade. This is the trade that I took today. Unfortunately, I'm not coming back to X. I'm not good at dealing with BS, and I'm not coming back to. I value my peace of mind more than anything. So I think that is all for from me today. Yesterday I also
been listening. The guys can ask the questions right now.
Yeah, if they are listening, maybe they can ask the questions. Westy, you're saying I should open X for only one day. There's a guy called Kerosi on X. He has all my charts, the one that I posted. Maybe you can talk to him anaweza kusaidia nazo. There's someone saying you only trade after 9:30 open. Mostly, yes. I only trade mostly after 9:30 open, but there are times I take trades before 9:30. I don't know if I'll check that from my journal. Let me see. There are trades that I usually take before 9:30. I don't know if I'll find them. This is yesterday's PM session trade. So it should be this is let me see, this is yesterday. I want to show you a trade that I took before 9:30. So there's someone telling me to touch on I can see some of those charts. There's someone telling me to touch on dealing range. So so about dealing range, let us use, for example, 5 minutes before for example, if you look at, let me cut this price to somewhere around there. So if you look at this chart, this is the liquidity up here that I would have targeted on this market. This one, this is the liquidity. So if you look at from high to where the market when this is This is the 1 hour order block from yesterday, and it's already 10. 10 is already here, and you are expecting the market to retrace for you to buy up here. So what I would normally do, first of all, you have to understand that personally I trade breakers only. For example, in this case, this would be, let me first exit this. This would be my last down close candle before the liquidity sweep of all these lows on the left, including these ones, into the 1 hour breaker on higher time frame. So if in your dealing range, when you take your fib and you place your dealing range, your highest probability breaker has to form below 50%. If your breaker forms up here, that trade is not high probability. If your breaker forms below 50% of your dealing range, let's say the dealing range is where your target is to where your market hit a higher time frame PDRA where you expect it to start turning. So if I have my fib like this and I can see my breaker is below the 50% mark, I am expecting price to at least retrace down to below 50% in order for me to enter this buy market here. So this is how you use the dealing range. If you're buying from here, you look at where are you now, which is the lowest point. The market dropped from here, which is here, for you to want to go back up there. And all your entry method, there are people who use 2022 model, which is liquidity sweep, market structure shift, fair value gap. All those setups should form below 50% of your dealing range. If your liquidity sweep is after 50%, let's say, for example, someone will take this high and then wait for a liquidity sweep, that is a low probability setup. And in most cases, this market is going to take you out. And you also find that your stop losses are too wide because your setup for buy on lower time frame has not formed below 50% of your dealing range. So for me, if the breaker forms here, so this is now, I will wait for something like this. Let me play this market. I'll wait for a retracement, maybe into this one. You see that? So I will take my entry from somewhere here, and my stop loss is below or in the mean threshold of this order block, and then I'll wait for the market to play to my take profit. So this is how you frame using your setups using the dealing range. And as you can see, the market 288.9, this is 288.4. So your liquidity has already been taken here. So that is how you deal with your dealing range. And then my RR is determined by where is my liquidity. In fact, my RR doesn't matter. What matters is I've built a model that that helps me take my trades from the, if I am buying from the most discount side. For example, in this market, I'm sure I took a trade from somewhere down here. Let us explore this area and see what happens. So if you look at, this is 1 minute. If you look at this trade, the market, this is the last down close candle now on 1 minute. This one, this is the last down close candle before sweeping of these lows on the left into the 1 hour. This is 1 hour order block, this shaded area. So if I am targeting London highs, these are London highs. These are London. Let us assume we are targeting these highs. If I place my fib from here to here, you can see where my breaker is. My order block, which has not yet turned breaker, is it's on below 50%. So if it's always below 50%, you will always get an RR of 0.5. This is 1, 2, 3. It's that simple. Your dealing range will always give you an RR of 1:3 if your entry model forms below 50%. If it doesn't form below 50%, that is a low probability trade. And I've taken trade like these that breakers have formed above, and then I get wrecked because, first of all, if your breaker is here, your RR is small, maybe 1:2. If you look at your stop loss can be here and your take profit is here, so your RR is 1:1, you see. But if I take this trade from somewhere around here, my RR is 1:2 somewhere 3, or even if I have a higher target like this one, my RR is 1:4 and above. So in this trade, I would buy somewhere here, and then my stop loss can be mean threshold of this order block, considering this is a market structure shift, fair value gap. So if and then my take profit is somewhere there. So you can see this is a very good RR. This is 1:3 risk to reward ratio. So that is how if you know how to frame your dealing range, they will help you to have a higher RR. For the person who is asking how you determine the RR, and this is a trade I took. I don't know which day is this. This is yesterday. So if I look at my history here from yesterday on my chart journals, yesterday was on Thursday. This is yesterday was 24th. You can see the trade. Even my entry is just here, and this is, and then you can see my stop loss placement is here. So this is how I took the trade. And when you're buying, every bearish PDRS should be used to support your price to go higher. So this was the same trade that I took, the one that I've demonstrated. So that is how you frame your RR while you're in the market. You just have to know where is your dealing range, where is your liquidity. Now, from your liquidity, where do you want to buy from? If you want to buy from the market is turning and your liquidity is here, your liquidity is up here. Even if you look at this one, the one for today, my liquidity is up there, and then sorry, let me place it correctly. My liquidity is up there. You can see my entry is always below 50%. My entry is here, and that is why I have a tight stop loss and a very good RR. So that is how you frame using the RR. I don't know if you have, there's a lot of questions. There's a post you shared using fib levels. I've already done that. When you take trades on PM session, what do you really look for before taking a trade? Now, Wayne, let me answer your question. I'll use the PM session trade I took yesterday. Let us go to, this is I took yesterday. Let me cut. I think having issues with my, this is Thursday. So this is the PM session. So when you are taking trade, I don't know why it's taking time to load. So when you're taking trades, if you look at this trade that I took yesterday during PM session, now I took my entry here, right? And then this was my first take profit, this liquidity. This is the trade that I've just demonstrated. But then I had another liquidity. I don't know why I had other liquidity here. So when price reached this high, taking my first take profit here, but did not sweep this liquidity here, in my mind, I am knowing that this retracement price has engineered more liquidity here for buy side during PM session. So I will wait for lunch hour to play out, like this one here. And then during PM, after 2 p.m., I'll look for a PDRA that price can retrace to. For example, in this case, like this inversion fair value gap here. And when price does this, this is a liquidity sweep. So let me show you. During PM session has started here. This is 2, this one here. But then this liquidity sweep, because the lunch hour runs from noon to 1:30. So after 1:30, I'm starting to frame my setups. So for me, this is a liquidity sweep here. This is the last up close candle before market came back and swept this. But note, it did not sweep during PM session. PM session had not started. So I don't have too much expectations with this price run. And the reason is this. The market closed above my breaker, but then there is no retracement. So I am comfortable with this trade taking my TP and leaving me, as long as it has not given me what I want. And what I would want is price to retrace into this fair value gap above my breaker or deeper into the breaker before I take a buy. So I'm very comfortable with this price going up and taking my liquidity here if it does not give me a retracement. So what is the market telling me? The moment it doesn't take this previous high and the high that I'm anticipating, I'm knowing that there is more liquidity being engineered here. And when something like this happens, a drop like this again, now this is an inversion fair value gap. So this is a turtle soup inside an inversion fair value gap. So I will take this trade without hesitating from here and targeting these new highs that have been created here. And if I show you, I took the same trade, I think yesterday during PM session. I'm not sure if, let me see. I took the trade yesterday. Yesterday is 24th. During PM session. Let me see. Yes, you can see when price dropped down here, I used this inversion fair value gap to enter the trade up here. I knew price is going to buy, so I took even before the inversion. The ideal entry would have been wait for price to close above this retracement, enter here, and then go return here, enter more longs, and then this is how you frame that trade. So during the PM session, you look at, did price achieve the AM session's goal? For example, where your liquidity is. So those are the things that you look for. If price did what you wanted during the AM session before you frame your PM session sell. So you can, trade. So you can see I bought the same market. So that is what you look for when you're framing a trade during that time. So that is how you frame the PM session trade. So RR buy side or kuna engineered buy side. How are you navigating all time frames? You have to know how to navigate in different time frames. Sometimes I even use 15 seconds time frame sometimes. So for this price action, I would anticipate a run into this breaker, this one, if price is to go up. But for me, I'm looking for sales to previous day low. How do you determine where you take partial NB, especially kama kuna multiple swing points before you full TP level? Yes, man, Samusa, I'm using 1 minute. I trade on 1 minute time frame, and my liquidity mostly is based on 15-minute time frame. But I only trade the direction of the 4-hour candle. Like I have to know where the 4-hour candle is moving in order for me to trade. And if the 4-hour candle aligns with the daily bias, those are some of the best trades that I can take. Or if the 4-hour candle is supposed to retrace maybe into a PDRA like a fair value gap or an order block, that is your 4-hour candle that starts at 10 should mostly align with your higher time frame or daily bias. Those are some of the trades that run the best. And now if you look at this one, you can see the 4-hour candle is consolidating. So I'm sure people are getting chopped in this price action trying to trade the 4-hour. In such a scenario like this one, I would usually sit and watch until after lunch hour. That is when I'll start now trading or framing another trade. How do you determine where you take partial? For example, in this market, if I wanted to take partials, this one, I would have taken partials so I have the RR. You have your RR here, which is my entry was here. So I have 1 RR, 2 and 3. So my first take profit would be on this swing high here. If you're using dealing range, your first take profit should be here, and then you let the other run. If your RR is 1:3, but then sometimes I get even 1:10 RR, so I'll take multiple partial. But every time there is a swing high and a PDRA below it that has been violated, let's assume you are buying from somewhere na huko chini kabisa, and this is an inversion fair value gap and this is a high. Once the market violates this inversion fair value gap and then trades above this high, it is safe to take your partial here and even trail your stop loss. How do ICT? Do you use ICT macros? Yes, I use my ICT macro. I use them a lot, especially on a PM session. Akona soft voice, lol. Do you use NDOG and NWOG? Yes, but not on Fridays. I don't expect to be using NDOGs and NWOGs on Fridays because on Friday is usually TGIF, and TGIF, the market is usually supposed to retrace at least some percentage of it's the power of 3. For example, the market opens on Monday. Sorry, let me draw somewhere else. So the market opens on Monday. Let's say you are buying, so you'll and then manipulates down, goes up, and then on Friday, if the market is here, like the way it's almost there today, you expect some form of retracement before market closes usiku or whichever time, New York time. So this retracement of the weekly candle called TGIF, the 30 at least 30% of the weekly candle range retracement, that is what you expect. So if this is the weekly candle, that means the NWOG and NWOG formed somewhere here. You don't expect the weekly candle to drop all the way to NWOG on Friday. So I would mostly expect to have only a minor retracement of the market back into the range. How do you use how to determine the daily bias? This is how you determine the daily bias, or more so, this is how I determine the daily bias. And for me, it's easy because I don't trade during London session. So I'll come back to the charts at around 8:30 and look at what has the market been doing. So if you look at, for example, this is a daily fair value gap here, which was filled on Tuesday. So if the daily fair value gap, if the market filled daily fair value gap here and closed outside that daily fair value gap, for sure I know that the next day this market is going to buy. Let me remove these drawings. If the market retraced into the daily fair value gap on Tuesday and then closed above it, I know for sure the next day the market is going to buy. So what will I do? I'll be expecting a measure of retracement into this week, this daily week, before I frame my buy on Wednesday. That is because this was on Tuesday. And as you can see, this is on Tuesday, and then the whole of this is on Wednesday. And this was a very good market maker buy model. I actually traded these London session highs drop into, there was a breaker here, and then I bought all the way to sweeping of these highs and beyond. This target was achieved on Wednesday, this one, this target here. So you frame your daily bias based on what happened the previous day and which PDRAs are there. For example, I knew this was a buy automatically. The only time I will get some, like for example, this all-time highs has been taken. So I also expect some measure of retracement. So I'll be looking for PDRAs on 4 hour instead of the daily. If the daily is not clear, you can see here, now you don't know what the market will do next, or if it will open here and then buy, continue buying, or retrace into this order block and then continue buying. So what you do is you look for PDRAs on the 4 hour, for example, inversions like this one, or fair value gaps that, like these ones that are supposed to support price the way price is doing now. See, so that is how you frame your higher time frame bias or daily bias. And if you trade during New York session only, it's easier for you to know what the market is doing, because by the time you're coming to the market at 10 or at 9, already 2, or I don't know if it's 3 candles or 4 hours have already played out, so you can easily frame your bias. How to determine, are you trading unatumia? I use New York time. You can see here New York time is here. Kindly touch on how you identify valid liquidity sweep. So most liquidity sweeps, there are different categories of liquidity sweep. For example, there are session liquidities. There are session liquidities. If you look at my trade today, what did I target? Let me show you. I targeted these highs inside the fair value gap, which are also London session liquidity highs, which had not been taken during New York. So the first liquidity is session liquidities, these ones. For example, price swept London lows. These are all liquidities in London lows, these ones. And then went and swept what? These liquidity sweeps inside what? This fair value gap here. So that is one type of liquidity sweep. The other type of liquidity sweeps are equal lows or equal highs that have formed inside a PDRA. For example, this is a whole fair value gap. This one. This is a whole fair value gap. And they have created some equal highs inside here, and you expect some measure of retracement into a fair value gap before continuing to sell. So this is also a valid liquidity sweep. And also you can see that there are London session liquidity that are inside a higher time frame PDRA. So this is a very, very high probability liquidity sweep. And then the other category we have is higher time frame liquidity sweep. For example, if you look at this market here, This one, this is liquidity sweep, external liquidity sweep. This one, these are equal highs. This one, they are classified as equal highs. The market dropped all the way to and swept this maybe into a PDRA somewhere here. This one, this order block here, and because it's a market maker by model, at this point the market is somewhere here. So we don't have all these price actions. So these are external liquidities that the market was targeting. So this is another category of liquidity sweep. We have internal and external liquidity sweep. So they are session liquidity and then internal range and external range. Session liquidities are also internal range liquidity because they fall within. If we are going to all-time highs, which is, I don't know if it is this one. I think this is all-time highs, if I'm not wrong. If we are going to all-time highs, this one, this is all-time highs, but I have already traded internal range liquidity here. So this is external range liquidity. Liquidity, these ones here. And then the other category of liquidity is order block liquidity. There are liquidities that lie inside high probability order blocks. For example, and that is what I trade. Now, these are liquidity sweeps, these ones here. So my last up close candle before the sweep, this is the order block here. Before this sweep, all this liquidity here, this one, those are order block liquidities, but they are usually very complex because this liquidity sweep has to be, the lows are swept, in this case, into a higher time frame PDRA. And in this case, my higher time frame PDRA, you look at the recent higher time frame PDRA was this 15-minute fair value gap here. So this liquidity have been swept into these lows here, have been swept into a 15-minute order block, and then we start buying. There are also liquidities that form inside volume imbalances, inside NWOGs, NDOGs. For those people who know NWOGs and NDOGs, sometimes the market, I don't know if we have an NWOG for this week, sometimes the market opens up. This is Wednesday. And then within the NWOG, there is consolidation, and then market breaks away and leaves that consolidation inside the NWOG, and then it will go back for that kind of liquidity. Where is Monday? I'm looking for Monday. So Friday. There was no NWOG this week. I can't see any. So, but there are liquidities that form inside volume imbalances like NWOG and NDOG. But for me, how I trade is mostly I look for equal highs and lows on 15-minute time frame because I am trading using 1-minute time frame. So for me, liquidity like this one for London or this one's for London is high probability because they are session liquidities, and that is what I mostly trade. So I think I've exhausted the questions, if I'm not wrong. I don't know. But I will now hand over back to the owner of the stream. I think as Kenyan you should use. No, you use Anthony Mbugwa. You use the time you feel like. For me, I learned through ICT, and ICT uses New York time. So I'm comfortable with setting my laptop on New York time, and the market runs on New York time. So that is what I am comfortable, and it's easier for me to use that time rather than Kenyan time. The last time I tried using Kenyan time, mimi najuanga tu 4:30 ya Kenya nafaa kuwa nimekaa kwa trading station yangu nikiangalia laptop. That is all I know. How do you determine a high probability order block? Now, that is a very, very, very interesting topic, which I was actually going through the other day. High probability order block. For example, let us look at one example here. A high probability order block has some few characteristics, and characteristic number one is, for high probability order block, is it must lead to liquidity sweep into a higher time frame PDRA. For example, I don't know what I'll use. Let me look for a perfect example. This one, let me use this one. This here. This is the last up close candle before price swept all these lows into, I don't know what is this, unless I go on a higher time frame. Let us see what this is. No, I think I marked a fair value gap here. 4 hours. Let me go back. Nimepotea, guys. So the first characteristics of a high probability order block is it must lead to a liquidity sweep. That is one thing. So if you look at this candle, the market was trending here. So this was the last up close candle before market dropped aggressively, sweeping all these lows into this higher time frame PDRA. This can be another order block. If you're on 15-minute, this can be order block, 30 minutes order block, 1 hour, 4 hour or weekly. So that is one characteristic. If your order block does not sweep liquidity into a higher time frame PDRA, it is not a high probability order block. That is one characteristic. Another characteristic of a high probability order block is it should form at specific time. For example, I cannot use an order block that formed during Asian session to form my trade in London or New York. So my order block has to form within the session which I am trading. If you look at, let's drop to lower time frame because they are the ones that I use. If you look at my trade from yesterday, this one, you can see here, this order block here, this one, formed during 950 macro, this one. This order block formed during 950 macro, and it is the one that led to sweeping of this liquidity into a one. There should be a 1 hour order block, a bigger order block here. So this is a candle that led to sweeping of all these lows into 1 hour order block. So it formed during 950 macro. I could not have used this one. This formed during 825. I could not have used maybe this one. You can see this one formed at 2 because it's the last up close candle before liquidity, these lows here, because this order block formed at a specific time, which is high probability time during sessions. So it must also form at specific time. It should be time-based confluence order block. The other characteristics is it should lead to a displacement on the opposite side, leaving a fair value gap. And the displacement should be strong, for example, and also a market structure shift. If you look at this, imepotea, what time frame were we in? Where is it? I'm lost. If you look at this, you can see the displacement away from it is very strong, leaving some few imbalances here. If you come to 15 minutes, you'll find this is a whole fair value gap. And then retracement, and the candles are closing inside the breaker, and the market moves away. You can see that. So there must be a displacement on the opposite side leading to market structure shift. So those are the most high probability conditions for an order block for you to know that this order block is going to hold water according to how you want to play. I'll show you some of my journals. Let me show you some of my journals. You'll see the order blocks that I use. They all have that characteristics. Let us look at this one. I'm just looking at random charts so you guys can see I do the same thing over and over again. This displacement, where is it? This displacement above this high here is a market structure shift. So this order block here qualifies with all the conditions that I'm expecting it to do. Has led to liquidity sweep into a higher time frame, PDRA. Look at the time it is forming, between 10 to 11 silver bullet. So it is within the New York session. And then it has led to displacement above, and then there is what? A fair value gap, return into fair value gap, and this trade played out very well. I don't know if it is the same. I'm not sure if it's the same. So it is the same thing. If you look at most of my charts, it's the same. There is the trade actually. So your order block has to be high probability. Another example is this one. This is the last up close candle here. This the market later end bought. So I'm still there or I'm talking to myself. I am not sure. Are you guys there? Before you go, I usually place limit order when entering the market, but it usually rejects 50% of the time. It's forcing me back to MT5, but you can use instant execution. For me, I wait to enter the market manually. I execute manually. It is easier that way. Ongelea CISD, that is Mr. White's stuff, but CISD is basically market closing above your order block to create a breaker. Your network is faulty. Yes, sir. Your Wi-Fi is bad. Sauti inapotea. Oh, so guys, that is all for today. I will hand over the stream back to Marcolin, and I'll be showing up from time to time. I told him we can do some live trades on Tuesdays and Thursdays together. I'll be appearing on his channel to do. We can trade Nasdaq together, doing live trades, executions, and everything, so that you guys can learn how to navigate the market. Robbie Morara, yes, I use SMT a lot between. I use SMT between. I don't know if there was. Let us check if there was SMT today. Between Nasdaq and yes, there was SMT today, as you can see here. So Nasdaq swept 930 candle. Where is it? What candle is this? 935. 935. You can see the candle for Nasdaq swept this lows on the left, and then the one for ES failed. So this is a kind of SMT. This is a sign that the market wants to reverse. And I would have usually traded this one, but I am used to Nasdaq a lot. So I think I use SMT also a lot, and it's a good indicator that the market is reversing. So guys, that is all for today.
All right, all right. Thank you very much. Hebu kila mtu a drop comment hapo. Say something about what Wilson has done. You guys, thank you for tuning in. Danos, thank you very much for showing up. You've been a very good mentor to me. I've learned so many things from you, and I hope we can continue sharing these skill sets to many people out there who need the information. So I think that is it for today. You guys keep sharing the link. You subscribe to this channel, and it's going to be amazing. So that is it for today. I'm going to end the stream. You can leave some comments for Thanos there if you want to say something. Yeah. I'm sure he's reading the what you guys are telling him. So he'll be here. We'll be doing live executions with him. Okay, that is it. Stephanie, welcome. You came late, but I hope this is the only place you come late. Yeah, Tuesdays and Thursdays, Danas will be here with us. Yeah, that is it.